Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for the first day of fall, Tuesday, September 22nd, 2020. So as we had a day today, we had what's called a Tuesday reversal. If you read the Stock Trader's Almanac, or ever have, it was developed by Yale Hirsch, his son now runs it. There were a lot of these anecdotes that came out, and it would be if you had a hard break or a rally on a Monday in the stock market, and this is based at that point, obviously, on the Dow, the S&P, not some of these other markets that have come up. You'd get a reversal on a Tuesday, the logic being people taking some money off. And in those older days where this came from, we didn't have the internet. We didn't have all this. So you'd get something happen over a weekend, everybody'd react on it at the same time in the morning. You didn't have all this. Well, did it really change? I don't think so. I think that you're still getting the news flow and people pay attention to that to a degree. We're looking at XLY did fine. If you take a look at the different ETFs on the QQQ, the SPY, DIA, and the IWM, they were all in good shape. Gold was stable, but that's all that I could say about it. Down 88 cents here, and the miners up a little bit, but still not acting like a good market. Energy markets, we're still seeing that overall the API tonight came out, and we saw that the net of all the products and all was about 7.5 million barrels. Not a bad number at all. That should offer a little bit of support. We'll see what it does in the morning. And do remember that you've got, today you saw Fed Chair Powell, Secretary of the Treasury Mnuchin speak in front of the House. They again speak tomorrow, just Mr. Powell, and then Thursday they both speak again. So the news today was pretty clear if you were listening to it. And I think that the story is there's only so much the Fed and the Treasury can do. They need Congress to join in. And Congress isn't joining in. And with that, there's only so far you can go. The Fed chair was very clear. The Fed can help with loans. It cannot issue grants. And in order to get the grants going anywhere else, you need Congress and the White House to get together. And all you had to do is listen and understand the frustration as to where you're at. It's politics at its very worst. As we looked at XLK, as I said, you held this gap. You didn't hold it, you filled it, and you've bounced away from it. Okay, but a bounce isn't a trend change. A bounce was an objective, and the market paid attention to it. When you look at the chart, you still have the pattern of lower highs and lower lows. Throw the name off the chart. If you look at the name, what happens to you mentally is you've decided you know the fundamentals. The reality is until you take out 117.30, the pattern of lower highs, lower lows is at work. The resistance in the market is at 117.46, and it's likely to drop right into that 1730 area tomorrow. So if you get a rally, I wouldn't be surprised if that's still the resistance area of the market, even though it could knock out the downtrend. And where's the market trying to hold? Well, it hasn't been able to get to that lower Bollinger Band. The only time you've done it since March was here. And if you go back, you got to go all the way there. So we all know, now we'll take off our blinders, that the strongest sector in the stocks has been QQQ, XLK, the techs. We get it. When you look at the slow stochastic, it is a market that is just plain drifting here in oversold territory. Not picking up momentum to the downside, but also not lifting itself, just staying very oversold. SMH is in a downtrend with lower highs, lower lows. To negate it, you got to take out 172.18. In front of that is a resistance point of 171.55. The market is oversold. I don't know that the pros want to defend that 18-day average. I define oversold as a market having a slow stochastic reading under 30, either number or both, but not both going sideways under 20. Oversold market immediately takes me off the radar of trying to do anything in a market like that, be it recommendations, trades, whatever you think it should be. XLI, yesterday you hit an objective. This market's caught very much in these black bands, and that's called the Bollinger Bands, and the algorithm is one designed to keep the market trading within them 95% of the time. To get out of them after they've gone sideways, you will get into that 5% category. And so you get there from time to time. It traps people. They say, oh, this is the breakout, it's going to go. No. This is called a pipe. If you want to trade in a pipe, I wish you the best. In order to trade in a pipe, you've got to step away from trend ideas. You're trying to buy a deep break, contra trend, sell into the rally, contra trend, and hope it reverses because it's in a pipe. Forget it. Number one, it ruins your psyche as a trader. On the energy sector, we are oversold. The market's in a downtrend. It has again hit a downside target. Both numbers today are under 20 on the close in the slow stochastic, but not the day before. You're just oversold. Oversold takes me away from it. I got better things to do than trade oversold markets. The trend is down. What are you trying to do? Be a buyer in a downtrend? Why? QQQ, oversold. It's the same thing. Trend is down. Here, just like XLK, you don't want to hit, or the market doesn't want to hit, the lower Bollinger Band. It gets close, but it hasn't been able to do it. Why? Well, I think people are saying, hey, each time it breaks, you're getting a certain percentage break, like we had a 10 to 13% break on this washout. I think traders that had pulled money out of QQQ, and a lot did over the past few weeks. I think they said there was $4 billion that came out of this sector. Nibbling. Why not? But dangerous nibbles. Why? Got an election 6 weeks from now, from today. Who's going to win? How's Congress going to be formed? What's going to be with it? What's going to happen between now and then? You know that everybody's going to pull out every plug. Even the Supreme Court. I was surprised. Mitt Romney, who has been against the president on practically everything, went and voted that no, he thinks it's right that the nominee and maybe a Senate vote takes place. Okay. Trying to play all this, I don't want to be a politician. I have enough trouble trying to think I'm a trader. In the emerging market, higher high, lower low, chop, chop, chop. That's what this is. It's not doing anything. Momentum down, big layers of support here. The 100 in green, the 200, and you're riding the lower Bollinger Band. 2 days on it isn't a formal ride. Get 3 or 4. That's riding it. And then you got to turn your attention differently, because once you lock in on those, if the market locks in, it just keeps staying on it, and that can be very bearish if that occurred. GLD, in this sideways action, the question is, are we going to get a breakout? You went yesterday under the band, and now you've pulled literally right back to it. There's nothing friendly on this chart. You still have momentum pointing down, the trend down. You'd have to take out 184.09 to break this downtrend. The market is not in oversold condition, so I don't think it needs to see short covering just yet. If you break much more, it'll get oversold. But that's the interesting part of where you're at. And on the gold miners, again, the first challenges, just like back here, that Bollinger Band have held. Nobody knows what the next days will hold, but this was what we call, quote unquote, easy area to come out. That does not mean the market's going to bounce, but 95% of the time you stay within the bands. I think traders pay attention to that. In TLT, I don't see a trend. I see a market that's just churning itself between the 18-day average, the 100 is resistance, you get some slippage, and then it comes right back to it. Wasting your time on that one. A trade that has been catching people and might have caught them is this. If you get a breakout to the downside of any merit, I have seen the banks, I have seen analysts saying the dollar is going down at the second part of this year, which we're in, the last quarter, if you will. That's not what's going on. The euro's the one dropping. Yes, it's a mixture of the COVID hitting the UK, Spain, other areas, but this currencies are a huge market. I don't know if anybody understands just how big in scope they are. And if you get this going in a direction, it could be very interesting and change things. If the dollar rallies, what's that do to the idea that the dollar is going to break, commodities cheap, blah, blah, blah. Well, we're at an interesting zone. There is nothing other than the market is oversold, and that's very important, but nothing other than that to hang your hat on. There's nothing bullish on this chart at this point in time. You know, we talk about all this and write about it, and I realize you're going to say, hey, you guys are at the Board of Trade, you're grain guys. That is true and it's not true. I promise you. I'm looking at stock indices. I'm looking at SPDR's ETFs all day long. We're looking at what the bonds are doing. And while the SPDR ETF guys think they're in their own universe, guess what universe you're really trading? You're trading ours, because many of these products, the big ones, are based on what our futures are doing and where the market's going. And that's what determines it. Plus, they trade 24 hours a day, almost 23 most days of the week. So you want to know what's going on. We make a free trial to our research covering the things you might want covered. How do you get it? Just go to our website. Free offering, sign up for what you want, we'll put it in your hands. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow.